Hello. Tamilnad Mercantile Bank's Quarter 2 fiscal year 2026 earnings are out. The earnings, people are pretty excited about it, so let's check them out. Okay, first of all, congrats to the bank. They have opened their 600 branch. Okay, 600 branches have been opened. As you can see, 441 branches are in Tamil Nadu. So let's take a look at the earnings. We got performance highlights. Here we have the earnings. Here, focus on Quarter 2 fiscal year 26, that was latest quarter. We'll compare this to Quarter 2 fiscal year 25 and year-on-year growth we're looking at right now. So deposits grew by 12.32% from 49,342 crores, 55,421 crores. Current account and savings accounts, okay, grew by 9.30%. Really, really nice. Gross advances grew by 10.34%. Gross advances, total number of loans. RAM. RAM refers to retail, agricultural, and I forgot what the M means. These are a category of loans which the bank wants to increase, grew by 13.02%. Net interest margin, very important metric for bank, unfortunately decreased from 4.25% to 3.83%. So let's see if they can actually increase this. So their goal is to actually, management's goal is to keep it between 3.85, 3.95 only. Operating profit actually declined from 465 crores to 452 crores. But net profit increased from 303 to 318 crores. We will see how operating profit declined, but net profit still increased by 4.73%. Credit cost declined from 0.55% to 0.15%. Really, really nice. Really nice. Gross NPAs. What are NPAs? Non-performing assets or total number of loans or percentage of loans that have gone bad, meaning borrowers are unable to pay back. Very important metric for banks. Declined from 1.37% to 1.01% of total assets. That's a good thing. Net NPAs 0.46 to 0.26. Again, if you don't know, the lower this number, the better. So it's declining. That's very, very good. 0.26 is really, really nice. Return on assets actually declined from 1.94% to 1.85%, so that is concerning. Return on equity declined from 14.83% to 13.77%. 13.77 is still decent, but okay. And provision coverage ratio increased from 66.4 to 74.36%. Again, this ratio is provisions. I believe, as far as I remember, provisions divided. Provisions are funds set aside for specific purposes, in this case, covering bad loans. So funds set aside provisions upon, I believe, total number of bad loans. So PCR actually increased 66%, 74%. That is a good thing. Then for highlights, the lowest gross NPAs in the last 10 years. Okay, advances, growth aligned to market and momentum picking up. Now, current account, savings account trend has been reversed. Shares up by 58 basis points quarter on quarter. So current account, savings account as a percentage of total advances. Oh, sorry, total deposits, percentage of total deposits was declining, which is not a good thing because current account, savings account, they have to pay a really low interest rate on these kind of deposits. So cost savings for the bank. So it's actually increasing. Share, it's a trend reversal. That's good. 12.32% deposit growth, nice. And total business, that is, yeah, deposits plus advances grew by 11.4%. They're trying to actually grow faster. Then, moving on, we move to way down the line. Here, okay, here we have multiple parameters. Focus on the 3 months, okay? So, interest income, you can consider this as the sales growth, okay? Sales growth. So, year on year growth, total income or interest income grew by 5.68%. Non-interest income actually declined by 8.5%. Total income, therefore, only grew by 3.62%. But interest expenses, the money they have to give us interest on, like deposits, interest on loans, 10% increase. Operating expenses actually decreased by 1.55%, which is good. Operating expenses decreased. Employee costs decreased by minus 7.9%. Other operating expenses increased by 5.7. Finally, net interest income, which is, see, interest income minus interest expenses is net interest income, only grew by 0.18%, leading to decline in operating profit. That's, yes, decline in operating profits. Operating profit declined. However, what contributed? What contributed to net profit was increasing by 4.73% was this: provisions other than tax. Again, provisions set aside to cover losses, like bad loans, loans that have gone bad. So funds have been set aside to cover those loans. So provisions actually decreased by 69.17%, which led to net profit actually increasing. So this net profit was not caused by their interest income actually rising more than their interest expenses and operating expenses. No, it increased due to primarily provisions were lower. So that could be a red flag. Why are you not making more money based on your interest income? So that's a big thing. Now, they have said there is a reason. Financial performance has been impacted by one time recovery in return of accounts. So here's the thing. What does this mean? Now, a loan goes bad, so of the balance sheet, it has to be written off. So it is removed from the balance sheet and it is treated as a loss. That writing off or removing the loan from balance sheet is treated as a loss. But Tamil Nadu Mercantile Bank says that most of its loans that go bad, they're actually recovered after some time. Let's say they're written off, they're treated as a loss, but maybe after 6 to 8 months, they can still recover that amount because it is backed by some collateral security. So a good portion of the money lost is actually recovered later. So in quarter two fiscal year 2025, 12 months before, there was a total recovery of 98.55 crores. While quarter two fiscal 2026, there was only 13.07 crores of recovery. And one is other income principal, 61 crores of principal was recovered. Interest income, interest on those bad loans, earlier bad loans, was 36 crores. So adjust, if you adjust for these one-off recovery that happened 12 months ago, interest income actually went up by 8.48%. Net interest income, very important, actually went up by 6.32%. Total income went up by 9.69%, and operating profit actually went up by 19.83%. So let's see if this one-off happens again. But if it does not, and this momentum continues, maybe we can see this massive operating profit increase in the future. So this was the reason that they gave. There was a one-off recovery in return of accounts. All right, moving on. What else? So earnings per share have increased. Look at this. Earnings per share have increased, reaching 20.05 rupees from 19.15 rupees. Okay, book value per share, very important, increased to 596 rupees from 532.37 12 months back. Return on equity. So it seems that there was a trend. There was a trend of declining return assets and declining return on equity. But in the last 1 or 2 quarters, it has actually increased. So maybe this is a reversal of trends. Let's see. Let's see that. Then moving on, where was I? Yes, gross NPAs as a percentage has been declining massively. That is a very good thing. Gross NPA as a total amount was 584 crores, declined to 474 crores. That's very nice. Net NPA is also declining very fast. As you can see, as a percentage, also been declining very fast. Slippage, number of, actually, I don't know the meaning of slippage exactly, but I believe it's something related to number of loans going bad. So lower this number, the better. And it has been growing lower overall. So that's a good thing. But let's see if they can actually maintain this growth. Okay. And yes, remember those RAM? Yeah, the M is for MSME. RAM assets as a percentage of total advances. Yeah, RAM. The M is MSME loans, loans given to MSMEs. And finally, we come to this. The cost of deposits was 9% 12 months back. It's still 5.9%. Cost of funds has also 5.9 to 5.91%. Okay. Credit cost 0.15, massive decrease. Net interest margin going down very much. But I believe the bank has said that even though net interest margin is declining, because they want to sustain a higher percentage of growth, they want to grow faster, they're kind of fine with this decline. Of course, they're not happy with it, but in order to sustain that growth, they will have to sacrifice a bit on net interest margins, and they want it to be near, I think, between 3.85, 3.95%. Let me see if I can find it. I think I noted it down somewhere. Hold up, hold. Yes. Yes, so okay, they're hoping in quarter one fiscal year 2026, the management said, so 3 months, 4 months ago, management said they're hoping deposit growth to be somewhere between 10 and 12%, which they succeeded. And they want their net interest margin to be between 3.85% to 3.95%. You can zoom in here. You can actually see this. You can pause and read. Yield on funds has been going down, but again, cost of deposits has also been going down, and yield on advances has also been going down very much. But cost of deposits, cost of funds have also been going down. If you're wondering, oh, look at this, look at this. Cost of funds was rising, cost of deposits was rising, but yields were declining, led to this massive drop in net interest margin. However, you can see the rate of growth has almost stopped because of this reversal in the costs of funds and the costs of deposits. So let's see if they can keep this up. Interesting report on the metrics for like credit cost, managing bad assets, number of loans that have gone bad. The bank seems to have done a very good job. They're trying to grow faster. And it seems to be gaining some kind of success. But this one-off account, if this is like this does not occur again, okay, other quarters not impacted. Maybe we will see that interest income actually going up by 8.48%. Maybe we can see even operating profit, sorry, net profit to grow in the double digits in the coming quarters. So let's see if Tamil Nadu Mercantile Bank can sustain the growth, and bye.